Hi traders, you're welcome to this video. In this video, we are going to be looking at one of the biggest debates in technical analysis, which is the golden cross versus the death cross. Okay, so if you are in the Forex game, understanding these patterns can give you a serious edge. All right, we are about to break down everything you need to know to master these powerful indications. Okay, now, in this video, we are basically going to be entering the world of moving averages because the moving averages are the indicators that we use to identify the golden cross and the death cross. Okay, so in order to cover these popular patterns that traders use to understand market direction, the moving average indicators are very important, tools that traders use to identify big opportunities. Okay, now let us get into what each of these terminologies mean, both the golden cross and the death cross, and we're going to be looking at how to spot them and how they can impact your forex trades. Now, first up, the golden cross. This occurs when a short-term moving average, I'm just going to be adding the moving average to the charts as I'm explaining it. Okay, I'm going to add the 50 moving EMA, and then I'm also going to add the 200 EMA. All right, so now as for the golden cross, this occurs when a short-term moving average like the 50, when the short-term moving average like the 50 EMA, like this, crosses above a long-term moving average such as the 200 EMA, which is represented by this. Now, many traders see this as a bullish signal, suggesting that an upward trend could be taking shape. Now, in Forex, where trends can shift quickly, spotting a golden cross might give you a heads up to enter the market with momentum on your side. Okay, but remember, when a golden cross can indicate a potential uptrend, it's not foolproof. Okay, in as much as a golden cross shows you that an uptrend is imminent, it does not guarantee profit. All right, so it's important to combine it with other indicators or tools to confirm the move before jumping in. Now, on the flip side, we have the death cross. Okay, on the flip side, we have the death cross. I'm just looking for a very good example of a death cross. All right, okay, now this pattern forms when a short-term moving average such as the 50 EMA crosses below a longer-term moving average such as the 200 EMA. It's often seen as a bearish signal. Essentially, it warns that a downtrend could be on the way. Just like the golden cross, traders use the 50-day and 200-day moving averages to identify this pattern. Now, when you spot a death cross, it might be a signal to proceed cautiously or even exit a position if you are concerned about a price drop. That is if you are in a buy position. Okay, if you are in a buy trade and you notice the death cross, it's a sign that you should exit your buy trade. All right, however, don't hit the panic button too quickly. Like the golden cross, the death cross works best with other technical tools to confirm the trend. All right, so how can we actually use these indicators in forex trading? Think of them as guides rather than absolute rules. Each cross has strengths and limitations, so combining them with other technical analysis like support and resistance levels or maybe RSI can help you make more balanced decisions. For example, while we know the death cross to be a bearish crossover and the golden cross to be a bullish crossover, it's important that you can also make use of horizontal support and resistance levels, because that can also help you to know potential reversal points and also confirm the signals given to you by the moving averages. And then trend lines can also confirm the trend as well. Okay, because while the golden cross happens, imagine the golden cross happening when the trend line is telling you that this is a buy trend. That's an additional confirmation, right? So that's very important. Okay, and then you can also decide to use other indicators as well for extra confirmation. Now, I want you to know um when you are using these moving averages to get your golden cross and death cross signals, it's important that you know the appropriate places to set your stop loss. Okay, and important places to set stop loss can be for a sell just above the previous swing high, and for a buy just below the previous swing low. Okay, and then for your exit, when you are in a buy trade and you notice a death cross, that's an exit signal. On the other hand, when you are in a sell trade and you notice a golden cross, that is your exit signal. Okay, now I want to know, do you use golden crosses and death crosses in your trading, or are there other patterns you prefer? Let me know in the comments below. And if you found this video helpful, be sure to hit that like button. Subscribe to the channel if you want more tips and strategies to level up your forex trading skills. Thanks for watching. Don't forget to turn on notifications so you don't miss out on our next trading breakdown. Until next time, keep trading smart.